Fuqua Company has accumulated the following budget data for the year 2008. 1. Sales are 30,000 units and the unit selling price is $80. 2. Cost of 1 unit of finished goods consists of direct materials 2 pounds at $5 per pound, direct labor 3 hours at $12 per hour, and manufacturing overhead $6 per direct labor hour. 3. Inventories, raw materials only, there were 10,000 pounds in beginning and 15,000 pounds in ending. 4. Raw material cost are $5 per pound. 5. Selling and administrative expenses, $200,000. 6. Income taxes, they're 30% of income before tax. And the instructions to us is to prepare a schedule showing the computation of cost of goods sold for 2008, and then prepare a budgeted income statement for 2008. Let's tackle Part A now by preparing a schedule showing the computation of cost of goods sold for 2008. And on the screen you see key pieces of information and the instructions near the top. And now on the bottom I'll illustrate the solution. We'll prepare the headings for the computation of cost of goods sold for the year ending December 31st, 2008, and then we'll work the solution. Direct materials, it took 2 pounds at $5, so that's $10. Direct labor took 3 hours at $12, so that's $36. And manufacturing overhead was applied at $6 per direct labor hour. So we take the same 3 hours of direct labor times $6. That gives us $18 for a total unit cost of finished goods, or total cost of goods sold per unit of $64. And then, since we intend to sell 30,000 units with our budget, 30,000 units times the $64 gets us $1,920,000 of cost of goods sold. Now let's take a look at Part B, which asks us to prepare a budgeted income statement for 2008. And again, you see the requirements for the problem and the information given on the top part of your screen. And now on the bottom we see the solution, where we put together the titles, the name of the company, what the statement is, and what time period it covers, and then we drop in the information that was provided. We're expecting to sell 30,000 units at $80. That's $2,400,000. Cost of goods sold we solved just a moment ago at $1,920,000. When we subtract that from sales, we get gross profit of $480,000. They told us that selling and administrative expenses would be $200,000. Therefore, we're now down to income before income taxes of $280,000, and income taxes expense was expected to be 30% of pre-tax income. So we take the 280 times 30%, come up with 84,000, subtract that from 280,000, and we've solved this problem, coming down to net income of 196,000.